All right, what is up, YouTube? Once again, so basically, oil has broken through, I think, about two support levels on news of an oil glut. Now, let's go ahead and check that out and see, how prices are reacting and how is that, reacting to relative to RSI and the chalk and oscillator. So let's take a look at the contract. We definitely see that oil prices are definitely hitting lows, super low. I think this is a 5-month low. And what you notice here for the RSI is that there are no buyers for oil right now. There's a lot of sellers, overtaking, that position, dumping oil left and right. And as we see here, the chalk and oscillator is definitely pointing down, letting us know that the sellers are definitely still in charge and there are no buyers stepping in to bid oil back up. Now, this is definitely looking at oil of over a 1 year viewpoint, and yeah. So what we see here is that oil is definitely getting oversold because of the news of oil glut and also the inventories. So what we notice here is that it's taking out multiple support levels. So we see right here 45-ish. Let's go ahead and zoom in on it so we get a perfect price. So we say 45.17 or 45.1. This will be a perfect price for the bottom of oil, as we see right here. Acted right there as well. So let's zoom back out and let's see how it looks relative to where the prices are trading. We see that we need just about a couple more cents to get down all the way to that 45 handle. Now, when we start to break through handles such as 46, 47, 45, we just use pretty much handles instead of looking at different price points. So we see a breakdown here, and we see we've broken through support. And like I said, when we break through support, it's typically followed by a large bar piercing through support, or it's either a gap down. Now, measuring buyers and sellers, RSI, can be right at sometimes, or it can be wrong. Now, oil has been oversold for a while. As you see, I put a video out saying oil bottom is here. Now we see that oil, the RSI for oil is definitely below 20. So it lets us know that the sellers are definitely still in charge. We can look at the short for oil, and we definitely know that it's hitting 14%. And what we notice here is that anytime you see a chart that's breaking down to the upside, breaking down to the downside, this is typically where you want to short it because you know that support has now been pierced, and now it leads to further downside, for that stock to, go down further. Now, I know a lot of people, they may be talking about the healthcare, but as we notice, the market is now turning positive. So it had somewhat effect to the market, but, before the vote, the market was definitely, trying to creep back up leading up to the vote. I'm not sure if the vote had anything to do with that, but we noticed that the market, tried to turn positive, and after that, it went back negative. So let's check out the Dow Jones. We see the Dow Jones on the 1-year levels now. It's definitely let us know that buyers are, there's a lot of buyers, but there's not a lot of buyers to where, you're saying that, go ahead and short the market. But anytime we start to hit these levels right here past 21,000, that lets us know that the market is definitely overbought. Now the RSI does change relative to where people are selling at. So we always have to pay attention to what the RSI is definitely letting us know. But I want you guys to notice this. A lot of people are telling you to trade off the RSI. Now, this is an instance where the RSI has gotten it wrong. Now, pay attention to the, excuse me. When I say, we trade off different indicators, we want to pay attention to those indicators. So, we see the RSI is definitely let us know that the sellers are definitely in charge of the stock. Like I said, once more again, but oil has been oversold for a while now. Now, what broke us through that was news. Now, what bounces us up from here will probably be oil inventories. Now, the RSI does not account for news. It does not account for events. The RSI just lets you know where buyers and sellers are relative to stock price on that stock chart relative to the time as well. So we don't want to say, okay, pricing in this event, the RSI prices in any events. No, that is definitely Now we make sure that we're paying attention to the events relative to the oil prices right now, because right now oil is definitely getting dumped left and right. Like I said before, I just want you guys to know that we shouldn't, make moves exactly off of the RSI, because the RSI has shown us that oil was oversold for a while now. So like I said, before we make moves on ETF, we check the contract. So we check the contract letting us know that that it was oversold, and ETFs letting us know that we're oversold. So now we can add some leverage to our position once we start to buy it. I don't own UWT personally, but it might be something I might be looking into tomorrow, just to trade around, just to see if we're going to see a dead cat bounce here. And typically that happens when stocks are oversold. The stock tries to bounce back up, and after that it falls right back down. But we might see that soon. But we're looking at gas inventories, and we're getting really skeptical on that. So 45 handle does not hold. This is where it starts to get really scary here, because like I said, we do 50, 45, 40, 35, 30. So we use $5 increments for oil, or we can use, well, I wouldn't say $20 or $10 increments, because we know oil moves in a small range so far. Oil has not moved much, but it's up over 100% since the bottom. So with that being said, read, research, understand the way that these patterns are moving, because patterns change. There's no 100% guarantee that the oil trend will stay the same, or the pattern won't be broken. We see right here, we see an uptrend happen right here, support happen right here, support happen right there, and we see a breakdown in support, and we see support levels breaking through right here, and another support level holding up right here so far. So right now we've broken through just about 2 support levels so far. So technical analysis is also key to when you want to price in, where support is, or where you should buy, or where you should short, because they will actually let you know, where the stock will have problems or where the stock will see strength at. So with that being said, guys, that's all I have for you today. And I'll be back with tomorrow. Hopefully I'll trade something that's really good. But currently, Kim Orrs definitely dumped some of that stock today. I see it tried to break past $40, and I sold it way too early, because I was like, wow, I broke through $40 finally. But we see, the stocks definitely have a hard time breaking past that $40 level. So this is why I kind of eliminated my exposure to the stock. Definitely took gains around the mid 39s, and still somewhat exposed to the stock right here at these levels. Also Square, I dumped shares at the $20 level, and I do still have some exposure to it, but I really don't feel comfortable holding shares at around all-time highs, also at a overbought level, because it starts to get a little sketchy here, because we see RSI was about 75 when the market opened. Now the RSI is about 73. So it lets us know that the people are definitely coming down off of price, and people are definitely using this for a trade, or they might be investors who are looking to just dump stock because they're taking gains here. So we see a gap up. We gapped up to all-time highs right here, and after that we see all-time highs right here reached at a high of $20.42. Now we can hold the stock, or we can take gains, wait for it to fall back down, and then reload. I prefer that strategy better, rather than holding a stock more than 5 months. If I have gains on the table, I'm definitely going to take them, wait till the stock pulls back. After it pulls back, I reload in the stock, and I refuel those gains. So right now the stock calls for a check down to be at 1805. We see support holding, or once the stock price updates for today, we're going to see support levels right here, support levels right there, and support levels right up in here to increase the price. Now, if the stock price does come down, this is where it starts to get interesting, but I only want to buy shares below $20, because once we start to go past that $20 level, that's typically where it opens the door to go to 25 and 30. But 25 is definitely looking towards the future. For first of all, we have to get that second quarter out of the way. They're expecting a loss for the second quarter, and we have to get that quarter out of the way. That probably will provide some downside or some I would say some opportunity for people to actually get into shares. So, we want to price in every single thing that, that's happening with the company. Even if we are investing in a company, we don't want to feel too comfortable where, if the stock is up, we just leave gains on the table. If the stock is up, take gains, reload on a pullback, and, keep compounding your profits. And that's simply how you're going to beat the market every single time. Now, Starbucks is definitely, going higher. I have no problem with Starbucks. It looks like it's going to recover back to being overbought just about. So I have no problem with Starbucks. This is definitely a long-term stock for me. And Kim Coors is actually a long-term stock for me. But I'm really waiting on this thing to actually hold that $40 level. It starts to get, really skeptical when I see $40 cannot be held. And, that's typically what I look at since I pay attention to technical analysis. I'm heavily watching, different price points so that way I can get in at the perfect price. So that's all I have for you guys. Take care.